Trade tariffs are the overarching fundamental theme in the markets at present. There are other news strands, from corporates to economics to politics, each of which would have had the potential to be market-making news, but pretty much everything at the moment is being swamped by the effects of tariffs. So let's look at the technicals to step back from some of the fundamental news headlines that seem to be swamping the markets at the moment. Regular guest Bryan from Trader Noble joins us now with his analysis of what's going on. I don't think it's too much of an exaggeration to say the markets are being almost twisted by this. These trade tariffs have been put on.
Yeah, it's incredible. We're now looking at Trump's Twitter account nearly on an ongoing basis, because the guy can tweet at any time of the day, as we've seen over the last 10 days, and he's certainly knocked the market down. He's got to be careful, though. I think he's trying to get the Chinese to react, but not to the extent he wants, because remember, the Chinese own $1 trillion of the US bonds, so they can't afford to upset them too much. So I think this is just a game. I think Navarro's comments last night, which rescued the market in the last half hour, is a pointer to that.
Yeah, but that didn't stop the Dow from closing below the 200-day moving average, did it? I mean, this is happening on Trump's home patch. We saw Harley-Davidson drop at, I think, 7% down at one point. It was on the session. And we've got the Dow trading now below the 200-period moving average. From a technical point of view, how significant is this for you?
Yeah, it's just actually at the 200-day moving average today. So the Dow last week broke the 50-day moving average, which was key, whereas the S&P hasn't and the Nasdaq hasn't. Yesterday, the S&P got down to 2,700, which is the 100-day moving average, and managed just to close above the 2,715, which is the 50-day moving average. Same with the Nasdaq. And we've got to remember here, last Wednesday, the Nasdaq, after 5 consecutive all-time highs, made its last high on Wednesday. Yes, it's fallen 4% since then, but we really need to take out, I think on the Nasdaq we need to get 69.50, on the S&P we need to take out yesterday's low, 2,700.
Here's the S&P. Let me just bring up that chart to show the break of that 50-period moving average. Sustained this bottom line here at the 200-period, did manage to clear that and bounce back.
That's 26.83, so it needs to hold that. Yes, if we do break the 200, but as you can see in April, we briefly broke the 200-day moving average for all the indexes, and half an hour later the markets reversed course, and the S&P went up 100 points from there. So, you know, as one guy said to me this morning, what would constitute a proper break of this market? We need to be closed below the 50 and 200-day moving averages for at least 2 to 3 days. So yesterday's trade in the last half hour was key. We got down to just below 24,000. We've broken the 200-day moving average, and then the Dow rallied nearly 300 points into the close. Closed back just above the 200-day moving average, which is obviously key. Yesterday's low at 24,080 is vital for the market. You know, as long as we can hold over yesterday's low, and if somehow we can hang on to the 200-day moving average, then I think the market, after having fallen 1,200 points in the last 6 trading sessions, is way oversold. It's due a bounce. I think ultimately the market will work its way lower, but I think you know, if you're asking what would I do now, I certainly wouldn't be selling, as we say, in the hole, because the big move has happened.
If you get a close then below that significant level, then you are a sell, presumably.
Yes. Yeah.
Down to what level?
I think we'll go back down to the February lows and the April lows there of 23,500, 23,300, 23,500. Then if we break that, then we're in serious trouble. But I mean, I think ultimately we will do that on a long-term basis. I don't think we're going to do it at the moment. Yeah,
and just to ask you the same questions about the S&P 500, here we are at 2716. Again, significant levels to watch. If it closes below that, then where?
Yeah, look, we got down to 2,700 yesterday, which is a 100-day moving average, bounced back to close back above the 50-day moving average, which pretty much held the market. As we saw in April, we had a brief break on that Thursday. Everybody got excited about it, and then we reversed course very quickly. So again, we really need to break the 200-day moving average in the S&P. It's an amazing market, how you know, fractured it is, with the Nasdaq and the S&P holding above its 50 and 200-day moving averages, whereas the Dow broke its 50 last week and then tested its 200-day and broke it and closed back above it yesterday. So you know, it's a very fractured market. You know, Boeing and Caterpillar have done most of the damage for the Dow stocks. They're seriously oversold. If we can get a bounce on those, plus if oil can bounce a bit, then I think the Dow will probably stabilise.
Yeah, one of the features of the market has been the relative strength of the dollar. How do you trade euro-dollar at the moment? I mean, we've got recent lows around about 115 being tested, but there's been a little bit of a bounce on from there, currently trading 116.65.
Yeah, we've had a double bottom there with the 115.10, and then last week we broke it and went down to 115.09. You know, one signal that I follow a lot is the daily sentiment index, which basically is a reading for what trader sentiment is towards the market. The DSI for the euro got down to single figures, which is down at 8-9%. For the dollar index, it got up to 91-92%. It's not sustainable. We saw a huge reversal. We rallied 200 points off that. I think if the euro does not hold the 115 area, then I think we're going to go down to the 500-day moving average and the 100-week moving average down to around 114.50, which should give it support. So really, to get going on the downside, I think we need to break 113.80. But with the tariffs, the States, it doesn't need a stronger dollar. It actually needs a weaker dollar. And I think Trump, when he came into power first, he said he wanted a weaker dollar. The dollar got down to having been 103, then we rallied back up to 125. He's not going to be happy if this dollar goes down to 112, 113 again. So I think ultimately the dollar will weaken towards the back end of this year.
Yeah. When talking about a drop in equity markets, quite often we look for areas of where the markets are providing safe havens. Traditionally, we look at gold. Certainly, money's been going into treasuries, it's been going into the Japanese yen, but gold has suffered almost as much as the equity markets have suffered. What is happening with gold? And we've got a vast majority of clients currently long on gold at the moment, but where is it going? Well,
everybody's long gold. I mean, we see it from your clients. When I was here a few weeks ago, I think we're up near 80% of your clients were long gold. Gold is down $60 since then. It's now at 85%. Again, the daily sentiment index for gold is at multi-month lows. It's down in the single digits. The gold managed funds for futures trading has only got 23,000 contracts long, which is the lowest level since January 2016. I think gold is very close to a buy, despite the fact that everybody is long the market. We go back to the lows there of 12.36. There's a trend line support. So I think somewhere between 12.36 and 12.50, gold should put in a meaningful bottom where we should get a 5 or 6% rise. I think ultimately gold does break the 12.36 because it's come a long way from the lows of 2 years ago at 10.46. So I think there's plenty of room still to move to the downside. But I'm not a seller of gold at these levels. Silver did not break the May lows. That got to a low of 16.05 in May. So far it's held it with the lows on this move down to 16.17, whereas the gold broke at a 12.81. So that's what I would call positive divergence for the moment. If silver does take out 16 and we go down into the 15.5s, well then gold will probably go down and test this 12.36 level first.
Yeah, silver 94% long on the platform at the moment. That's an interesting, it's more than convinced about gold moving up.
Yeah, that's huge. So I mean, but so far we've held that level. So I mean, I certainly wouldn't be selling silver here. We need to take out this 1603. We've got to remember in May 2011, silver was trading at $51. It closed at 37 that particular day when Bin Laden was killed. Phenomenal move. That was a $14 move in silver, and now silver is trading at $16. So we're nearly had the daily movement 7 years ago is what the price of silver now is, which is incredible. So it's come a long way. I much prefer to be long silver than gold. I think if silver does break down through 16, I think it's plenty of support from 15.5 down to 14. I don't see silver having a huge bear market from here.
Okay, all right. Bryan, thanks so much indeed for joining us. Bryan Noble from tradernoble.com with his views on the markets at the moment, currently swamped by the fundamental news headlines of trade tariffs, but looking as well at some of the technicals around some of the moves we've got in the moment for the likes of the Dow, the S&P and gold.